Hey, this is Matt from InvestiQuant. Today is Thursday, January 21st, 2021. Yesterday, we saw another strong day in the markets. We had a gap and go scenario that ended up closing up not far off of the highs of the session and at all-time highs, new 52-week highs, but a very strong session in the markets. And today we have continued a little bit higher here in the overnight session. So we are trading higher than yesterday's closing price at the time of this recording, following yesterday's strong 52-week high close. And what I want to do this morning is something a little bit different than what we normally do. Normally I'm in here looking at setups based upon entering at the open and exiting at the close and seeing if there's a open to close like bias that has happened historically with whatever pattern we're looking at. Today we're going to look at something a little bit different. We're going to be looking at what's called a gap fade. So this is a different setup than we normally look at. And just so I can explain real quick what a gap fade is. Fade is the first thing you need to know. And fade, when you're entering at the market and you're fading the open, what that means is you are trading in the opposite direction of the opening gap. So scenarios like this morning or currently where we're at, we're trading above yesterday's closing price. So a fade setup means that it would be getting short in that scenario, trading back towards yesterday's closing price. If we were to be opening lower than yesterday's closing price, a fade setup would be a long setup, and it would be trading back towards yesterday's closing price. So it can be in either direction, but this morning we are trading up. So a fade setup would be a short setup trading towards the prior day closing price. So we're going to look at something like that this morning. Let me go ahead and set it up. I'll explain it as we go. I'm going to grab all four instruments for this. The setup is going to be based upon entering the market at the open. And like I said, the trade type is going to be a fade. So we're normally looking at just longs in here. Today, we're looking at a fade. Next, I'm going to go into the exit. I'm not normally in this library when I'm doing these videos. I normally just have it set to end of day. But since we're going to be looking at a fade setup, what I want to do is I want to select this prior close as the target. So instead of holding for the end of the session, this setup is going to be based upon exiting at the prior day's closing price. So it's more of an intraday setup. And then I'm going to add a stop. You can pick whatever stop you think is applicable for this. I'm going to just use a generic kind of middle of the ground stop. It's a little bit wide for intraday setups, but it'll give you a decent idea of what we're looking at. So I'm going to just pick the middle one here, 50% of the 5-day ATR. So that's half of what we're averaging for an average true range. So there is a stop on there. Next, I'm going to go into the opening filters. And since we've got this up gap forming, we're trading above yesterday's closing price. I'm going to go ahead and add that in the gap direction. And that's going to make this fade setup based upon shorting up gaps. And I'm also going to go into this gap size as a percent of the 5-day ATR. And I'm just going to put a minimum gap size in there. I'm going to put 5% in there. And what that's going to do is that's just going to get rid of some of the smallest gaps historically, and some of them that aren't necessarily tradable or worth looking at. And they can sometimes just skew win rates up or something when it's really not something you would even trade. So 5% of the 5-day ATR right now is about 2.25 points or so. So it's going to get rid of some of the smaller gaps historically. All right, next I'm going to go into the price patterns library, and I'm going to grab the price pattern from the active today section, new highs category, that says the prior day was a 52-week high close. That comes from this new highs category right here. But I've went ahead and added that, and now I can click view results. And here we go. These are the results of going short on up gaps that are at least 5% of the 5-day ATR when the prior day closed at a 52-week high. Now, the target for this is the prior day's closing price, and the stop is set at 50% of the 5-day ATR. So we do have a stop and target on this. Historically, this has happened pretty regularly. We've got 230 samples here for the S&P. We've got 254 for the NASDAQ, 220 for the Dow, and 151 for the Russell. And if you look at the win rates on these, you'll notice they're higher than what we normally see on our end-of-day biases, and that's because we do have a target that this is working with. So what the target would mean is that it's either going to get out at the target price, that would be considered the exit, or if the stop has not been hit and it closes below the open, since this is set up as a short trade, the fade of an up gap is a short trade, then that would be considered a win as well, even if it didn't quite hit the prior day close. Maybe it pushes down and then it retraces back and closes somewhere below the open and above the prior day close. That would still be considered a win in this scenario. So historically, the S&P has 70% winners on that 230 samples. The NASDAQ, 66% winners. The Dow, 60%. And the Russell, 76% winners on this. And if we look at average win, average loss, average win is smaller than the average loss here in the S&P. That is true for the NASDAQ. That is true for the Dow. And that is true for the Russell. But historically, what I was trying to point out in this study is the win rates on these have been favorable. You don't have to trade this if this is something that is of interest to you. You don't have to trade it with a 50% stop. You can go in and test this with smaller stops if you want, or if you're a discretionary trader, maybe you use something to lean on that you're paying attention to with the tighter stop and trade towards the prior close, however you need to do that. But historically, this has been a fairly favorable gap fade-like setup. And I'll tell you, the smaller gaps in this scenario tend to be better. So we're trading right around yesterday's high right now. So historically, the ones that open above yesterday's high get a little bit weaker. The ones that open within prior day range get a little bit stronger. But those are all things that you can test within Discover, really dig into this pattern and find the setup that is right for you. So hopefully you found this helpful. Good luck today, and we will see you next time.